different example. This was a sustained trading range for multiple days. We got the first low right here that we're going to base the trading range off of, and then this was the trading range high that we're going to base off. Before this high though, you see how there was a quadruple top in this area? We got 1, 2, 3, 4 highs in this area. So this would have been, before this occurred, right? This would have been the trading range that you would have been basing everything off of. If you pay attention to this area, what happens when price gets up in this area? So after this high, we're doing this. You see price doesn't break above here. It's not wanting to break higher. We obviously want to go lower. You short underneath a bear bar. You can short underneath here because this was a triple top, or you can short underneath here because this in the area was a quadruple top. You can short underneath a bear bar. You can short there. You can also short here because this was a pullback from this zone, right? Pull back up. And we also got a triple bottom here, so price didn't want to break beneath there. But you see how we're kind of forming a triangle in this area right here. We're kind of forming a triangle because price is trying to figure out, does it want to break out higher or does it want to break down lower? And in this case, we get double bear bars near a high. What do? You sell high. So you short underneath this bear bar, risking at least above here. In this case, you wouldn't have been executed out. It would have been good if you were going for a 1-to-1 trade. You would have got executed on this move down. After you sell high, what do you want to do? Buy low. Price comes down here and pushes up off of this low, right? Price is trying to come down to that low, but it just chooses not to. We're pushing up higher. You can buy above a bull bar, risking underneath here. And any short that you had from up here, you're now out because you bought out of it. Or if you didn't have any shorts, and you just wanted to buy, this would be the best buy area. Once again, risking underneath here, you take it up to near this top. You see we get one top here, we get a double top relatively in the same area, which is relatively in the same area as this. So obviously there's a lot of pressure, a lot of like selling pressure in this area. Price doesn't want to go higher than that. So you sell high, right? You can either sell high right here underneath this bear bar, or you can sell high underneath this bear bar because it's after a double top. Regardless, you're selling high, right? Because this high is higher than this low or this low, and it's near these highs because this hadn't occurred yet. We get this move down. Price tries to break underneath this low. It does break underneath it, but it doesn't finish underneath it. It only just comes and is like, all right, I really don't want to, yes, I broke this, but I really don't want to go underneath here because we begin to have a retracement back. We begin to have a pullback and a continuation of the bull trend. So we get one bull bar off this bottom. You can buy above a bull bar, risking underneath here. Had you done that, 1-to-1 risk reward ratio, you would have been executed right here. Or if you wanted to take it up to this high, this was the first time that this high got broken. You see how price goes up, goes up, goes up. It breaks that high. So price in this case is showing it wants to go higher. So this was a good buy, and you go up. You can try to short underneath this, but I wouldn't necessarily, because we just did break this high, right? So price is kind of showing you we are bullish right now. And after that breakout does occur, we get a small pullback going up higher to make this ultimate high of the trading range. And after that occurs, we get a pullback. And what do? You sell high. So after this high occurs and we're getting bearish price action, you can short underneath the bull bar, which would be this, and you short there, risking above there. And you can do a 1-to-1 or whatever that you want to do, end up doing. Regardless, you're selling high and you take the move down. And this ultimately ends up going beneath this low and ultimately even beneath this low. But even when it does go underneath this low, what happens to price? Price touches it, comes back up, and starts to push it in the opposite direction. So this is what I'm saying, bro. Trading price normally acts within a trading range. It's normally always going to be trading within a trading range. And in this example, the trading range was this low right here and this high. Look how much price action occurred. Like, this is almost 2 days of price action that occurred within this trading range. So I'm telling you, man, price is normally acting within some type of a trading range. Here's another example. We got this as the low of the trading range, and we got this as the high of the trading range. What do? You want to buy low. So after we make this first low right here, we get a push up high. You can buy above here because you always want to buy above a bull bar. So you're buying above there, risking underneath here, and you're taking price up, up, up. Then after this high is made, we get a retracement down. This is showing you that price doesn't want to go lower because this is a higher low than this low. So price wants to continue to go up higher. You can buy above here, risking underneath here. We're going up higher, higher, and higher. We make this high up here, right? And then we get a retracement in the opposite direction price begins to go up. So now after this high, we're using this low and this high as the trading range that we're going to be trading within. And this line indicates the 50% retracement zone from this high and this low. What occurs around that range? Price comes and tries to touch it, doesn't want to touch it, bounces off of it. You can buy above this, trying to take it at least up here. If you do that, your stop loss is at least underneath here or underneath here. In this case, price pushes up to here. It doesn't want to break this area though. You see how it's having a little bit of trouble. So it's showing you like, I don't really want to go higher than where I'm at right now. So you can short underneath a bear bar. You can sell high underneath a bear bar. You're selling underneath here. If you want to short from here, if you want to have a short position down and take it to the opposite side of the trading range, which would be, this low, then you short underneath here with your stop loss above this, because this was the ultimate high. And if you're doing a 1-to-1, would have easily been executed in a couple hours, because I'm pretty sure this is the hourly chart. You would have been executed in a couple hours. And in this case, you would have taken it, if you would have wanted to take it all the way down to this low, would have occurred. If you got in right here, it would have taken about 2 days for that to occur, but that's like a 1,000-point move almost in 2 days. So that's really good. That's really, really good. And even after this, move down, we try to have a retracement up. What happens after 50% zone? Price begins to stall out and show you, no, I want to keep going in the same direction that I was previously going in, right? I want to continue to go down because this is a big bear bar. You can short underneath a bear bar because it occurred at the 50% zone. If you do short underneath here, your stop loss is above this. And you see how after this, price goes down, comes up, tries to retrace a little bit, but doesn't go above here. So it's showing you I want to go lower, and it ends up going lower. So this, is the trading range. This low right here and this high right here, you see how price was trading within that trading range for multiple days. I mean, this is a week, 2 weeks of price action. And it was trading within that trading range throughout the whole, and even after this, right? Price bounced from this low right back up. So who knows how much longer it was actually trading in this trading range. But this is what I'm saying, man. Price is normally always trading within a trading range. It's your job to figure out what that trading range is. And once you figure out the trading range, figure out your buy low points and your sell high points. Here's another trading range. So we got this as a trading range low, and we got this as a trading range high. If we're going from left to right, price is going up here, it makes this high, and we end up coming down lower to here. Even though we're using this high right here and this low right here as the trading range for this example, this was a trading range, this area right here. This was a trading range within the trading range that I'm showing you now. So what you could have done is, you see how this low right here occurred after this high? We can go, you see price comes up. It tries to break it underneath that low. Ultimately, it doesn't, it does break it, but it doesn't continue after that. We get a big push up, get big, huge bull bar afterwards. You can buy above that bull bar, risking underneath this low. In this case, had you done that, trying to do a 1-to-1, it would have been executed. It would have been a good trade. And once again, you're buying low at this point because this was the previous low. So you're buying low. You really wouldn't have had the opportunity to sell high here, because had you waited to try to bring it up to here, you would have been executed out on this, right here, this move. But you could have also bought above a bull bar, because this is another example of buying low. And had you bought low on this example right here, then you would have been able to sell high, because price never broke underneath this, stop loss, this low right here. You always want to buy low. This would be the buy low area. This lower 25% of the retracement zone would be the buy low area, and this upper 25% of this trading range zone would be the sell high area. Any buy opportunities in this area that you see could be a good opportunity to buy if price is trading within a trading range. So it's showing you like, I want to stay within this range, so this would be a great opportunity to buy. And once you get up here in this 75% retracement zone, price is showing you like, I kind of want to sell because I want to stay within this range. So you could have short underneath this low, because this is after a bear bar and this was an inside bar. So you short underneath this low, risking above here, try to take it at least to the 50% retracement zone or a 1-to-1. Either one would have been a profitable trade. We're kind of just hovering around the 50% retracement zone, right? And remember, this blue line represents a 50% retracement zone from this high and this low. So like I said, man, price is normally hovering around some type of 50% retracement zone on some sort of trading range. Price is always hovering around around like a trading range's 50% retracement zone. So you just have to find which trading range that 50% retracement zone correlates to. Here's another. I got two things to mention real quick. Number one, I am releasing the full course that this video is a part of. The full candlestick price action trading course is on YouTube right now. It's over 18 hours of free trading game. There are so many golden nuggets in this course, you're not even going to believe that it's free. But I believe this information is so valuable and so helpful for everybody. I just want it out there, honestly. I truly feel like everybody has the potential to benefit off this information, because if you can read a chart, then you can profit off of it if you know how to read it with the candlesticks. And this information that I'm giving you guys, it can be used to trade on any sort of candlestick chart, right? Whether it's Apple's candlestick chart or Tesla's or gold's candlestick chart or Bitcoin's or XRP's or euro versus the dollar or British pound versus the dollar, other stock markets around the world. It doesn't matter. If there's a candlestick chart, you will have a severe edge in reading it. I truly believe that with dedicated time and practice, anybody can become successful in trading. Anybody, like a grandma can literally do it. It just takes a lot of time and effort to learn how to do it. But understanding candlestick price action will severely help your trading journey. It severely helped my trading journey. I literally learned it, and a month after I learned candlestick trading, I became profitable. I passed my first prop firm account. So that's how impactful this information is. And I'm giving it to you for free. A lot of it. The second thing I want to mention is I am releasing amazing workout programs. As I've told you guys before, I am a certified personal trainer and a certified nutrition coach, but I've also been going to school for personal training. And shout out to my instructor, Paul, because he's given me hella golden nuggets throughout my whole journey in school. Because of that journey, I now have workout programs that can positively benefit everybody. And I mean it. Like, let me explain. I have a full body muscle building program, aka a hypertrophy program. I have a fat loss program, so if you want to lose 20 pounds, you get on that program. I've got a core program that'll help you develop a six-pack like this. And I got a booty building program if you're trying to get your Kim K on. And they all incorporate a little bit of cardio, because that's also very much needed in everybody's life as well. I'm also providing nutrition guides. I'm also providing recovery guides. And this is just the beginning. It's only going to grow from here. I already know how impactful it's going to be for other people because of how impactful it was for me. Because look at this picture of me from last summer and look at this picture of me from now. This progress was specifically from my muscle building and full body workout program. One of the beauties about working out and being active is it does not matter what age you are. You honestly have to do it. You need to be active. So anybody can work out with these programs. As long as you are medically cleared to work out, these programs have the tremendous potential to positively impact your life. And I'm so serious when I say this. The number one thing that you must always remember throughout both programs, whether it's the trading program or whether it's the workout programs, you must always believe in yourself and your abilities and your ability to achieve any outcome that you want, okay? Because you absolutely can, but it's going to take time, and you need to understand that it's going to take time. But if you dedicate the time, the effort, and the dedication to doing it, eventually it's going to happen. So don't stop. Do not give up on yourself. I believe in you. You got to believe in you too, okay? And you do it with this, and you do it with this. I believe. I want to end this video by letting you know that you are worth it. You are beautiful. You are absolutely everything that you want and need to be. It's already there. You already have it. You just have to realize it. That's really all it is. And always remember, regardless of what you look like, you are beautiful and you are created in God's image. And God is perfect. He doesn't do no wrong. So you are perfect. You just have to realize that perfectness within you. Or another way to say it is, you have to understand the confidence and the power that you have within you. My goal is to awaken that confidence and that power within you, because you truly have the power of the universe within you. You have the power of God within you. You got to understand it, man. You are one with the creator. You are a creator. So let me help you create the life that you want to create. Let's do it together. So go check out infinityian.com. Everything that you need is going to be there. And I hope to see you there. I love you guys. God bless you. And I'll see you guys in the next video. Whoosh.